So we've had incredible volatility over the last few weeks. So lots to talk about in terms of how to handle that. But like I said, also going to go over some trading psychology. I thought we'll even start with some trading psychology. So let's have a quick look at this. First one, people tend to try and find a low in a downtrend. In other words, catching a falling knife. There's a knife. So it's something you just got to, what I like to do is sell into a downtrend. I like to fade the trends. And so my system allows me to do that. There's a good fade set up on the Dow yesterday, which I'll talk about. So if you get directional, just short any pullbacks. But this is a really common thing. It's what the brokers find that their clients do. So we talk about why people do that and what you can do to try and get around that. So we all know that 85–90% of people lose money in trading. So it's a question of how we can all be aware of that and make sure that we're trading in a method that's going to keep us the right side of a trend. Okay, and also, if you get a really good uptrend, perhaps even intraday, if something's moved really far, it's very, very tempting to try and sell a high, isn't it? While this thing's pushing up. Very, very tempting. If you've got, I don't know, I don't use RSI, but if you've got RSI and it's way up here, it's very, very tempting. What I tend to find is if something is going to sell and it's extended, it will, don't fight the trend of the day, but wait and see if the following day they start to at least take profits. That's what I tend to do anyway. Other habits that can really affect your ability to focus and protect your account, protect your capital. A lot of people are adept at changing their position size. I think it's really, really important to, in this volatility, I think you need to stay very small position size and wider stops for a dramatic increase of volatility. So I think you've got to be very, very disciplined to stick with a position size that's relevant to the size of your account and do not change it unless you've got a significant increase in the size of your account. Right, and again, just as we talked about things that traders can do in this situation, we've also got. This is one that you used to categorize me. I would love to sort of trade something up and then try and catch it coming back down again. Well, I do have a setup for that on violent data moves, but I would not ordinarily do that in any normal day. Okay, so that's something that hi Asif, that's something that I would look to do. So I don't know how much you've heard of this, Asif, but yeah, we're just going to go on and talk about actual ways in which you can avoid this. Okay, so let's just have a look at any questions on that. Anything I've missed? Obviously, I've only put a few things in there, but if there's anything that you think is really prime time, then really premium examples of what people can do in everyday trading, then particularly day trading, then say so, and we'll talk about it. Okay, let's move on then. Right, let me just escape this. So this is the Dow today, and this is one thing that I've done to sort of try and predict the move in this Dow. They're really, really choppy, at least for the good long part of the early session. You know, this big push up into this resistance, drop back into support, spent a good couple of hours down here. Where are we now? We are 3.5 hours after open, so it's taken a long time for this to build up. But it's only by looking at some basics. It's basic support and resistance, isn't it? And then you've got a really nice chart pattern, really nice breakout. We, in fact, we've literally just been breaking out as you join the room. So if you want to stay the right side of a trend, there's a few things you could do. You could add a moving average. And you could always say to yourself, oh, I put 2 on there. Why have I got 2? I think I had one originally, didn't I? You could always say to yourself, right, if you've got particularly, I think this is 100, let me just double check. Yeah, it's a 100-day average. If you are under the 100-day average, always short. If you're over the 100-day average, always go long. That's one basic thing you could do on a 15-minute chart like this. And that would stand you in a good chance of keeping the right side of the trend. Pretty basic. It's early sort of stage 1 start trading kind of technical trading, isn't it? Just keep the right side of an average. Other thing, I find there's a lot of traders out there who, if you're making consistent profits, then I'm sure you're doing a lot of prep. But the main thing that I think a lot of traders don't realize, they don't realize how much prep somebody like me would do. I would sit there for a good hour at least before the open of a session and just map out what happened on the prior day and what's potentially going to happen on the day ahead. Okay, so I caught a 100 pip move into here and took it off, and then said I was going to sit back. And that's exactly what I did, but it's only just recently that this is just coming up. If we look at the bigger picture, this is how my bigger picture is mapping out. So we're at a major pivotal point here, this 700, 26,700. We climbed up here on Monday. We pulled back within that range on yesterday, and here we are picking up. Yeah, so really, you can see you've got that clear zone on resistance, and you've got this clear zone on support, and that's the Friday price that's underpinning that support, and that's the Monday high that's underpinning that resistance. So all we're doing at the moment is shunting around in that range. So if you're looking to do intraday trading, then this is the kind of way in which you should map it out. You should be very clear about support and resistance, and very clear about the pullback areas. And you saw how I zoned the pullback area. 285 was a price I had my eye on very carefully because of mainly the action that we saw prior to the US Open. So we had a lot of upside in the Euro session. Yeah, if you've got any questions, just type them in. Yeah, I would analyze. Well, I've got. So Ken's asked how many pairs would I analyze? A set of 3 to 4. I would look at a few things. I like to look at the safe havens. So I like to have a look at what the gold's doing. In terms of, I'm looking for the appetite for risk. If you've got the safe havens getting bought, then the chances are that that market isn't going to push higher. And we've had, this is the bonds. I mean, if the bonds sustain these highs, then it could potentially be a situation where money is coming out of equity markets and coming into safe havens with bonds. So that's something else to watch. And of course, here's a very, very simple one, the volatility index. So the volatility index measures volatility, and here we are all nice and sleepy with the Dow creeping up, making new highs, and then suddenly we just break out of it. So the volatility flies to the wall, and we get this really sharp break off. So if this market is going to sustain these highs, this volatility needs to come off. So we need to see this dropping and staying out of this area here and dropping back to something normal. And if you look at the selling that we had in the summer, this is the VIX. Okay, so I'm sure you all know this anyway. This is the VIX. I'll come on to your question in a minute, Ken. I haven't forgotten it. But so one thing I like to do is just look at the some of these elements of the market, and of course the dollar index. So look at the dollar index as well. So a weak dollar index tends to where are we? We shot up here. Yeah, so we shot up here into mid-Feb. So the dollar's a safe haven. It's still the reserve currency at the moment. So this breakout in the dollar matched the breakout in the VIX, which matched the breakout in the gold. So equally, this has been coming off since the 21st, Friday the 21st. So if this can hold down here, that could mean the indices have got a potential for a pullback. Now, let's just talk a little bit about yeah, I would start with the weekly actually. My weekly chart is the one that I do a lot of work, as much if not more work on the weekly. And you can see I was looking at all this structure at the highs. Now I'm looking at this support at the lows. So on the Dow 24,980 was a key level. We breached it, and so far we are holding up nicely. So if we come into the back end of this week, if we close like this on Friday, we've got US jobs on Friday. If we close like this on Friday and next week we come in and hold 26,100, then we could potentially get back up to 28. I think the rest of the month is going to be rocky. You can see this little, my projection was to hit this resistance. So we've got a trend line coming across on the weekly, which we've just hit, coming up from July highs and September highs. So we've dropped underneath it, and now we're coming on the underside of it and struggling with that level at the moment. So my projection is we're going to struggle a little bit more, come back down to, but who knows, maybe even down here somewhere, and then we could start to make our way up. But short term, this 27 area was always going to be potential area to start getting short again for me. Again, it comes back to what I said before. This is a 20-day average. Yeah, 20-day average. If you're under the key averages, then sell into a rally. Because I've just been talking about how the common issues with traders is the way in which they try and catch a falling knife, try and trade both directions, and so on. So, okay, so having looked at the weekly and the daily, then I'm going to come down to the 4-hour, and you can see the projections I've got here for the 4-hour. So we've got a 1, 2, 3 wave pullback here. So you could potentially come all the way up to that 27,125. So here's the way. So you normally get a 3-wave bounce. If we get up here and we get a sell signal somewhere around here, that's where I would want to get swing trade short again, because for a full-blown reversal setup, I would want to see a retest of this support down here. So I think we could possibly come up to 27,125 or more, perhaps 27.5. At which point I think we would potentially come all the way back down to 25, and if that holds, then wind our way up. Of course, start closing above these levels here, and then we need to keep buying and seeing if we can get up to these higher levels, if we're going to close above these levels. But in the meantime, I'm happy to start shorting, so I keep doing that. I'm happy to keep shorting these levels. Okay, so what would I look at? How many different markets would I trade? Well, I think in terms of stocks, 6 to 8 is a lot of work. So 6 to 8 stocks, and in terms of indices, I personally prefer just to stick to the Dow. I think it's, if you're going to put the work in, I think it's easier if you just limit indices to just one. So rather than trade the FTSE, the DAX and the Dow and the S&Ps or NASDAQ, I prefer the Dow. A lot of people prefer the S&Ps. S&P's minis are a little bit less volatile. That's the S&Ps on the 2 hour. Let's have a look at the DAX on the 2 hour as well. Yeah, you can see this 20-day average is holding up nicely. Yeah, about 20 and 100. So if we come and meet that 100, so at the moment, so based on averages alone and actually support and resistance, this DAX looks as if it's capable of coming back into potentially 12.5, which is not that far away. So so at the moment we are above this 20-day average, so that suggests you might still want to buy dips. And all the time, but if we start closing under 200, and particularly start closing under 12,000, then we need to get short and stay short. Okay. Of course, these time frames depend on the type of trader you are, whether you're scalping, whether you are trading intra-week, or whether you are looking to buy and hold. In which case, if you're looking to buy and hold, then you've got to keep a very, very close eye on at least the 4 hour. Absolute minimum the 4 hour. And this Dow is knocking its head on that resistance at the moment. So that is, if you go down to a smaller time frame, yeah, these averages have look good. It's patterns. If you're looking for a really good breakout, look for a squeeze. So we were shuffling around in this apex, closed above here at 5 UK time, pull back to the trend. So we could potentially get all the way back up to the emergency Fed rate high was 27,075. So it's possible it's trying to make its way back up there. Okay. But that is pushing up well. So it just took a long time to set up today. It doesn't normally take quite that long. But you can see that area down there was quite critical. That's the first 10-minute bar. So in fact, if I take all that off and just isolate the first 10-minute bar, look at that, we didn't once close underneath that 10-minute range. So all that selling that went on, there's a good few pushes to the downside today. All that selling, we didn't once close underneath that 10-minute range. So there was some decent clues in there. If you're a day trader, decent clues that that could push to the upside. Okay, but like it's a good question. How many markets would you look at? You know, like I said, 6 to 8 stocks and 2 or 3 other markets. But definitely for day trading, I would only focus on the Dow. I've met people who day trade stocks. They look for unusual volume and news. Look at the NASDAQ stocks that are moving prior to the open and try and get big moves out of cheap stocks. That's okay. That's a completely different discipline, and that's profitable. But it's, you know, you can only focus on a limited number of markets, and the more you focus on a particular market, the better you're likely to better read that market, and you're likely to be able to catch these trades. Okay, let's have a look at some bigger picture. Okay, we're seeing a decent push up in the pound today. Have a look at a 2-hour chart. Let's tidy this up because that's a bit of a mess. I haven't looked at this for a while, this 2-hour chart. Put this on, let's just do a quick fib. Got a gap up there, that's interesting. In actual fact, I will fib that to the gap. Whoops. Actually, no, I'll stick to that high. I won't fib that to the gap. Right. Excuse me one moment, just going to take a sip of drink. That's better. So I think next stop for this pound is 129 at this rate. Got that moving average in the way, 100-day average. So 128.80 is going to be a tough spot. But ultimately, I think 129 is going to be seen if we can sustain this market here. So have we got any forex traders in the room? I personally don't trade forex, but well, not very often. Used to trade it quite a lot. Beans. Used to trade beans on the futures market. I do occasionally still trade them, but not very often these days. That's a good reversal setup. So this low on the 27th of Feb was a good place to potentially get long, and you hold on to it if it breaks out of that area there. Your forex as well. Okay, so look at the euro. Now, euro pound has had a big push up. Let's get this one. I like a 2-hour chart just to. I'm just looking at the last month's move. I'm trying to look at the relationship of the price with regard to the previous month. So that's already that's coming to an extension up here. So if you're interested in, I think 110. If we see 110 again and that holds, I think this could blast up. As it is, it's sitting up quite nicely anyway. So we've had a 1, 2, 3. If we can just get a deeper 4 wave, then I think that might push up into 122 plus. If you look at the, one of the reasons why I don't trade Forex very much is because you can't, to me it's, I know it is a technical market, it's the biggest market out there. Why is that not letting me, oh I see. It's technical because it's the biggest market out there, but it's just, I think it's just the speed. I like momentum markets. Yeah, I like markets that sort of shift around quite a lot every day. Bitcoin, okay, that's a good idea. And this has taken a long while to 20th of Feb. Let's have a look at Bitcoin. Yeah, Bitcoin's a good one. Wow, that's been really volatile, hasn't it? Had a huge push up. Do you trade Bitcoin, Asif, or are you just interested in looking at it? Got very hot up here, very divergent. There's some divergence up there. And finally broke down. The breakdown started on the 15th. We've got a retracement here on the 19th. So basically got a 1, 2, 3, 4, 5. So what do I think? Where do I think Bitcoin's going to go next? Let's have a look at the daily. Let's look at the weekly first. Let's just use Bitcoin to talk about projections. So here we have the well-documented push up into close to 20. Dropped right the way back here in December. There's a buy signal on the 17th of December. New low, close above next day. So that's the buy signal on the weekly. Push back into a resistance area. So that's upper zone, inner zone. Take that, don't know what that is, let's take that off. So we've had 1, 2, 3, 4. Wow, it's getting smaller and smaller, isn't it? Okay. We're getting a bit of a squeeze here. So if Bitcoin comes out of that triangle, Bitcoin comes out of 72, that's in trouble. However, if we come down to that floor and hold, get a buy signal down here at 7,000, that could fly. That could start to wind its way up. Who knows? So I think the crux of this, I think we'll see some more downside. But if we hold this 7,000, then I think we can start to wind up. but close above 9.3 anytime soon, and it might happen sooner. I think it's highly likely we'll come back and retest that major, this bottom of this zone. So that's the bullish scenario. The bearish scenario is we get a little peak up here, and then we start to trail down. Let's look at oil. Let's finish looking at the daily on this. Let's keep this daily on. Let's just look at patterns for the moment. So close above 9,000 and that could pop higher. Otherwise, we had a big move here on Monday. So if we just consolidate, come back down to that floor and close above 9,000, that could pop higher. So on the daily, we've got this little structure down here, 84.50. If 84.50 holds, then we could start to pop up higher. Otherwise, look for lower numbers if we come out of that structure. So that's the floor. If we test the floor and hold, we could push up, test the floor and close underneath, we're toast. Let's have a look at oil, and then I'll go to DAX. Quick look at gas, because gas has been it's been a very mild winter, and that's clearly shown on the charts. No sign of any real, as we're getting to March, this could still, I think this could flail around and possibly even go lower. That's really struggling. Right, oil and gold. Okay, let's go to oil. I think oil is in real trouble, actually. It's had a huge drop already anyway. This really, unlike the indices, this doesn't look to me as if it's happy up here. I think if we come into that 50 area, or even up to 52, if we get as high as that, I think this could take another tumble and we could see 42 or lower. It's just, yeah, it keeps getting sold into. So I've not been trading oil recently. I'm just sort of backing off of oil and leaving it. There's plenty of other markets to trade at the moment anyway. Right, gold. This huge move up on yesterday. Central banks are scrambling to reduce their rates and scrambling to try and float these economies under the weight of the coronavirus. I wrote this off down here and got it wrong. I thought we were going to see some lower numbers on this gold, but where's the trend line? The main trend line support is down there. I think if these markets do continue this recovery, I think this will drop off. So we've had a 1, 2, 3 wave push. If we hard to short something that's, so we're just sort of gyrating around at the moment, aren't we? With this huge sell from 1690 all the way down to 1565. a bounce, and now with the indices trying to recover, we look a bit flaky up here. If I personally think this is too high, and we need another full blast. I was looking to buy 1550, but if we close higher, if we hold this level and keep above this 1630, then we could be coming up to 17 plus. Yeah, I think it's got a lot to do with these. If the normally in a good, healthy, normal relationship, the gold would be divergent with the markets, because gold pretty much a safe haven now. It's not. It doesn't. There used to be a season to the gold. That's since gone. In terms of the jewelry season, the Indian wedding season, that's slipped away. Gold's very much almost like well, gold's always been a currency, but it's more increasingly more like a currency these days. Why would you select 1630? Because of this fib level, because of this extension level. So once something gets extended above this area here, this was the main area that we were trading in. Let me get my pen. So we were trading, waving up and down in this area here. Then we broke out of this squeeze here. 1, 2, 3, 4, 5. 1, 2, 3. Yeah, I think that increasingly, what I've just done there, the 5-wave analysis, means that this is its real potential pivotal strength, 1550. So we come back to this box. These are extensions. So we're trading in this box for quite a while. Now we've broken out and we're into the realms of extensions. In an ideal world, I'd see that come back to 1550 and then buy that and come into that extension up there. So I'm looking for short-term weakness, longer-term breakup. Let's watch it and let's see how that plays out. I think if the market, if the indices don't hold these highs and we start to creep down to 25,000 on Dow again, then I see this just breaking up. So if this area, this 1630 holds, we could see 1735 sooner than I initially thought. At the moment, if you've got something that's behaving like this, if you've got something that's in another squeeze here, so we came out of the squeeze on the 18th. If you've got something that's breaking up like that, then keep buying dips. So for example, so here, that's the initial breakup into 24th of Feb from this squeeze. We've retested the area from the squeeze, come back into resistance. So all to do. Any other questions? Any other markets anybody's interested in? Not talked about stocks. Anybody trade stocks? Seems to be amazing this world. A lot of US love stocks. I find a lot of Europeans don't trade stocks as much as they should. Okay. See you again, Bill. DAX, right. Yeah, sorry, a couple of questions on DAX. Let's go over DAX. Ooh, that's a big push higher today. I still think, a good reversal pattern normally takes, I still think this will take a month to pan out. I don't think we're going to shoot up here. My ideal scenario would be a retest of that low. I mean, if this is going to perk up and hold above support, then keep buying. I mean, tomorrow 12,000 is a potential buy to come into 12.3. I still think for this to move, for this to work out, you need this to happen. You need this market to come back into this area here and really get a decent low on the indicators and then start to pull up. But short term, we don't seem to be hanging around. I mean, here we dropped hard, little peak, and then we went on a run. Here we dropped hard into support, and then immediately started to run up. This is obviously incredible levels, breaking new records in terms of daily ranges and so on. So I mean, the market's got a habit of dipping and running up. So like I said, I would keep buying this reversal, but it's just these levels here I'm looking for this to pull back from. I think inevitably there's going to be some impact on the economy. Let's just look at fundamentals for a minute. We don't really talk about fundamentals. Let's just allow me to talk about fundamentals for one moment. This coronavirus, for example, car sales in China have fallen off a cliff. I think it's something like 80% drop from this time last year. So Germany's a big car producer with factories all over the world, not just Europe. So this could, at some stage, this wave to the upside is going to catch the bears. It's going to sell into it, I think. So we could, next level up on the daily fib is this 12.3. Then we've got all this resistance up here at 13. So short term, I think we're higher, but at some stage, I think we're going to catch. I think the market's going to offer out and see this come back somewhere into this region here, and then if we form a reversal down here into March, April, late March in the April point, then I would buy that and then try and get back up. So short term, the market's picking up nicely, but I'm very, very alert on these levels, and this is the next level that I would like to short 12.3 on that DAX. I'm not convinced. Yeah, we got really floored, and the markets have picked up, but ultimately I think we will see another leg down at some stage. Okay, let's have a look at intraday gold for a second. That gold's got me really interested. Yeah, look at intraday. Yeah, there's the short-term weakness in the gold. I didn't see it's going up on a wing and a prayer. I think it's not. To me, it's not a wing and a prayer. It's the natural breathing of the market. There will always be bargain hunters. Yeah, I think these markets are driven by the futures, and when the bucket is too empty because there's too many people short, too many people sold the contracts. This is the bucket. There's the handle. Too many people sold the contracts, and the bin's really empty. At some stage, they're going to take profits, aren't they? So they fill the bin up, fill the bucket up again, and the market moves up. So all we're seeing is just the natural ebb and flow of the markets. So, you know, the big money is looking at the resistance levels, and it's also looking at the support levels, and it's just trying to exploit these levels. The fundamentals, yeah, they obviously we've got non-farm payroll on Friday anyway. The fundamentals are mixed, aren't they? We've got a string of good job numbers for the US. Even the UK job numbers have been pretty good, but GDP in the UK is only just above zero. It's hovering above zero and could so easily go into negative. GDP levels in the US are bound to be affected. So yeah, a natural ebb and flow of the markets, and that's what I'm trying to do. Anybody who wants to join us in the trading room, coming to scalperschool.co.uk, have a look at the program, have a look at what's involved in the program, and let me know if you're interested in joining me. Okay, the next one is on the 14th, 10 days time, Saturday week. Yeah, so that's why I'm personally so keen on shorting the highs, Ken. Okay, I'm going to finish up there and get away from these screens, take a break. Thank you very much for joining us. I will publish the recording of this. Any questions? By all means, spread the word, invite others to come and join us on Wednesdays at 6. Okay, we'll cover a lot. You get a chance to see it on the recording. Not seen the recording for several weeks. I have been posting it on the emails from the meetup group, definitely. If you give me your, I'm not sure I've got your email address, Ken. If you pop me your email address, I'll make sure you get it. But every time you've asked me for recordings, I have posted them on the meetup email. Right, okay. I'm sure there must be a way I can actually post it in the meetup group somewhere rather than just email. So I'll try doing that. All right, I'll make sure you get it anyway. Okay. I will grab that and make sure you get it. All right, thanks everybody. I'll see you soon. Bye.